In this video, we're going to talk about the tax strategy of employing your children and how it can save you money. This is a strategy I don't think enough families that own small business take advantage of. It is a very easy strategy to implement, and it is very lucrative, really. It is another situation where you don't really have to spend a lot of money to get a big tax deduction. And when I say big, I mean we're talking, if you have multiple kids, you can get up to the $20, $30, $40, $50,000 range. So that's a lot. So let's jump into it here real quick. So why should you employ your children in your business? And what this means is that your children become an employee of the business, working for the business, and taking home a paycheck from the business. Primarily, the tax deduction works by having the business expense the wages paid to your child. So that is a legitimate business expense, which reduces your taxable income and reduces your tax. The children, in certain situations, if you're a sole proprietorship, do not pay any payroll taxes. And if you're an S Corp or partnership, they do pay payroll taxes. But beyond that, that's really the only cost to this strategy. Whereas the advantage of it is the income that the children get do not have to be taxed in any way, so long as you stay under the standard deduction for single individuals, which right now is about $12,000 per child. So each child can be paid $12,000. They may or may not pay payroll taxes on it, depending on what kind of entity you are. And then if you want to pay them even more and have them contribute to an IRA or a 401k, you can do that as well, where some of the money after $12,000, let's say you pay them $20,000, $12,000 is not taxable because of their standard deduction, meaning they file a tax return on their own. And then $8,000 of it goes to, let's say, a 401k, if you have a 401k set up, and that goes into their 401k account, and you take a $20,000 tax deduction for it. So it's like I said, it's very lucrative. So when can you start employing kids? Now, there definitely are child actors that are employed and earning wages at the age of, when they're little babies on television programs or movies, that kind of thing. But we typically say don't start this until they've at least reached the age of 7. This is based on some case law having to do with employing children and child labor laws. So if they're 7 up to 22, in some cases, if they're still in college, up to 26, you can employ them and still take an exemption for them on your tax return, but you have each of them file a tax return for the $12,000, let's say, that they were paid by your business. And that $12,000 is reduced on a taxable income basis on their tax return down to 0 because they each get a standard deduction. This isn't losing you anything on your tax return because you don't get their standard deduction if they're not paid. It's just something that's lost. So there's no reason not to pay them. If you've got a sole proprietorship or a partnership, you could avoid payroll taxes on it. Your child does need to be a real employee, so they do need to do some kind of work. The duties are up to you: cleaning, helping with anything that you can think of business-wise. It's a legitimate job that they're doing, and what you pay them for that job needs to be somewhat on the spectrum of what you'd pay someone else to do it, which means that if the minimum wage in your state is $15 an hour, your child would need to make at least 15 and maybe might make more. So sometimes getting to 12,000 isn't really that hard to do. As you can see in Tax Planner Pro, we have a planner that will calculate this for you, so you can increase or decrease the number of children that you're wanting to see what you can save for. So if you have 3 children, like in this example, you would hit the little plus sign to get it up to 3. And then the lower boxes are actually showing different amounts of wages, so that you can figure out, well, let's say I'm not going to pay my kids $12,000, I'm only going to pay them $8,500 each. How much you would save in taxes total by doing that. The savings number is below it. I would again say that you should try and max it out, because what you do is when you pay the kids that money, you're not losing that money. That's not money that's going away. It's money that's going into the kids' checking account, and then have your child pay for things around the house. Have them pay for the grocery shopping. You know, give them a little debit card or something to where they pay for groceries. Have them pay utility bills. Have them pay anything you want to. It's still, they're a minor. You are in charge of that minor, and you can instruct them on where they use their money. So you can still spend that money. It's just going to them from a taxable income perspective, and then we're getting a tax deduction for it. So to implement this, what we're going to do is you have to be running payroll of some kind. So you're going to contact your payroll company, make your child an employee, and start running payroll for them. Again, pay them a reasonable wage. You can pay it by check. You can direct deposit it into their own checking account. Just make sure at the end of the year that your child files their own tax return, because they're going to get a W-2 for $12,000 or whatever you pay them. And they need to file a tax return for that to show that standard deduction, subtracting away that taxable income to where their tax return is going to be zero, but you still have to file it. This strategy has a very strong benefit. It's easy to set up. It must be implemented by December 31st each year. You know, you can't run wages for the current year that you're in past December 31st. So make sure that you're getting all of this done before the year end. If you stumbled across this strategy in December and you wanted to run the whole payroll in December, that's okay. You can do that. Any payroll that is run during the year is considered to have been run in the current year. So if it's in the last month or the last 2 months or something like that, that's okay. There's no rule that says you can't delay in paying them a little later in the year, but it has to be done. And again, this is a little bit aggressive, mostly from the perspective of you have to file another tax return for your kids. So it does require a little bit more work than normal planners do. But again, I think this one's not being utilized nearly enough. So if you have children that are in the right age brackets, I would definitely implement this. As always, you can hit up our forum. If you want to find out some more information, you can use the chat button in Tax Planner Pro to ask a question of our support group, and we can help you with this planner and questions that you might have. And then we've got some helpful links as far as more documentation online of where you can read more. And remember, these links are in the planner, so you don't have to try and write them down from this presentation. They're in the planner page inside your software.